Centrica, the owner of British Gas, has announced its half-year results, a profit of £2.1 billion. That's almost double the same period last year. Now, the business is broken down into two parts. There's the oil and gas extraction business and British Gas, which supplies household energy. Now, the profits split down like this. The oil and gas business, just over half, £1.1 billion, we can see there. But look at British Gas, £969 million of profits. That's a tenfold increase on a year ago. Now, given we're in a cost of living crisis and this is a regulated industry, you might be wondering how they can be allowed to make massively increased profits. Well, British Gas say that 500 million of this, more than half of the profit, is a one-off, a consequence of changes to the price cap imposed by the regulator, Ofgem. Changes made to help them and other suppliers recoup the losses they've actually been making over the last 4 years. This chart here shows us that since 2019, the industry as a whole has actually been making a loss on retail supply, going back there over the last 4 years in the red. That's because the price cap limits how much they can charge customers and how much profit they can make. And even though the price cap has risen dramatically, it hasn't covered the real cost of supplying energy. So Ofgem has been allowing them to recoup the losses and actually aims for a bigger profit margin of 2.4% this year. Consumer groups think the whole system needs overhauling.
There isn't actually any meaningful competition at the moment. Suppliers aren't afraid of losing their customers because there's been regulatory intervention, the price cap, bans on offering competitive tariffs to new customers, all that sort of thing, that's basically frozen most customers where they are. And on top of that, Ofgem's now allowing more margin in the price cap, but not much opportunity for better deals to be put out there.
Now, Centrica is paying more in tax on its profits from oil and gas extraction. The windfall tax on excess profits cost it £373 million in the first 6 months of this year. But with the oil price falling, the windfall may get smaller. Shell's 6-month profits have fallen by half because the oil price is on the way down. Now, energy prices will always fluctuate. But as long as we have a system of privatised utilities, this debate about what constitutes a fair price and a reasonable profit will be constant.